QQQ, I mean, it's one of those ticker symbols. You hear it once, you never forget it. I mean, it's so memorable. I'm sure that most of this audience has heard of QQQ, but what are the Qs exactly?
Sure. Great question. Thanks for having me, Ed.
Yeah.
So, as Ed alluded to, the Qs is one of the most widely known tickers out there in the world right now, but diving a little bit deeper into it, the Qs is just an exchange-traded fund passively managed. It tracks the NASDAQ 100 index, which is comprised of the 100 largest non-financial companies listed on the NASDAQ stock exchange. And really what we've seen throughout the years, it's been made up of highly innovative companies that really have performed well.
So is there this connection then between innovation and performance for the companies that it tracks?
Yeah, so I think most recently this confluence of performance and innovation is really illustrated well, obviously, through the Mag 7, NVIDIA as well. But I mean, if we take a look back, before it was Mag 7, it was Fan Mag. Before Fan Mag, it was FANG. So we've gone through all these different iterations of these very specific group of companies that investors are interested in. And why is that? Well, these companies have been highly innovative and have provided a great source of growth for portfolios, and obviously have really disrupted many different industries. It just so happens that we've seen a lot of these companies within QQQ throughout the years, and we really like to try to quantify what innovation is. In our opinion, it's been used in many different applications throughout the years, and we feel it's important to put some numbers and figures behind it. And we do that at Invesco by looking at research and development spending. And we see your average NASDAQ 100 company, QQQ company, outspending your average S&P 500 company, outspending your average Russell 1000 growth company on research and development. So really pushing innovation going forward.
All right. Apple, Microsoft, Tesla, NVIDIA, Amazon, Meta, Google. We all recognize these companies as the top of the top, right, when it comes to the technology sector, right? But we all know that for years and years to come, these companies will be the proverbial leaders that ushers in the next generation of advanced technology, whether it's growth in AI, growth in virtual technology, growth in computer science and technology, growth in technological performance with chip technology and autonomous vehicles. All these different areas will be focal points and major factors going forward in our economy for years and years and years to come. So the question for us retail investors, right, you and I, becomes, which one do we want to invest in? Which company will give us the best return on our investment? Which company will be ahead of the other? Well, right now, that's a question that is almost damn near impossible to answer. So, why not own them all? Own them all, you ask? Now, hold on a second, right? Because Apple is currently around $250 a share. Microsoft is around $450 a share. A share of Google is going to run you about $200 a share. And Amazon, even after the crazy stock split, is still $227 a share, somewhere around there, give or take. We're talking about over $1,000 that you would need up front to purchase one full share of each of these companies. And I didn't even get to the price of NVIDIA yet. Which brings us to an investor's best friend in the stock market, which is the ETF. ETFs are literally a basket of stocks that all are neatly bundled together for the price of one, which means essentially, if you invest into the Invesco Trust Series I ETF, that you are investing into all of these leading tech giants in one fell swoop. No guesswork needed. We don't have to do a deep dive into this one. It's very, very simple. If you want to own the top tech companies in your stock portfolio, then QQQ is where we come to play. QQQ is where we satisfy all of our gluttonous desires to own the biggest, the bestest, and the brightest of the tech industry. Now, I've seen all the YouTube thumbnails talking about whether or not QQQ is in a bubble, whether tech is in a bubble. When is it going to burst? If it's going to burst, when is a good time to get in? Listen, I have a very, very simple question for you to solve this equation, all right? Is there any company that is currently in the basket of the ETF QQQ that you are unwilling to buy and hold forever? If not, then the question of whether or not you should even consider buying QQQ for your portfolio isn't even one that you should ponder. All right? Now, in terms of what it's going to cost you, well, let's get into that right now. So, I've got QQQ pulled up on my favorite free website, stockanalysis.com, and as you can see right off the bat, it is around $530 per share. Now, I know you're thinking to yourself, Jesus Christ, $530 a share, that's more than every price that you named out of those basket of stocks, right? But consider what it is that you're getting with this particular ETF. And the price should also tell you the quality of stocks and companies that are within this ETF. And before we move on and get into anything further, let's just take a look at the charts, shall we? So, last 5 years, you can see that they're up 156%, going all the way back to December of 2019, right? If we look at the 1 year chart, they're up 33%, and that's even with the pullback that the tech industry has seen over the past couple months and throughout the year. Because remember, we started off this year with a crazy boom in technology. But since then, we've had sort of a pullback, right? You can see some of that pullback right here, right around there. And you can see some of it right around here, right? But let's look at the, what are we on? Let's look at the 5 days chart. 5 days chart, 0.77%. You can't really judge anything off 5 days, but let's look at the year to date. Year to date, they're up 30%, nearly 30% all for the year, right? So tech has been doing well. Now, QQQ has 102 holdings within it, okay? 102 holdings. And if you go and click on the holdings tab, we get to see what's in the top 10, starting with number 1, which is the most weighted or heaviest weighted stock that they have currently with Apple, okay? Apple is number 1. You go down to number 2, NVIDIA. Number 3, Microsoft. Number 4, Amazon. Number 5, Meta. 6, AVGO, which is Broadcom. 7, Tesla. 8, Google. 9, Costco. 10, Google. Again, as you know, that there are two different kinds of Google that you can purchase in the stock market. And if you go beyond that, it's just more companies that you wouldn't mind owning, like Netflix, right? Some of you may feel a certain way about T-Mobile, depending on who you are. But Adobe is definitely a company that I don't mind owning. Cisco Systems, another company that I don't mind owning. PepsiCo, AMD, which is the closest. AMD right here, AMD is the closest that you're going to get to to competition for NVIDIA, right? In fact, NVIDIA sources a lot of their technology, a lot of their chips from AMD, right? So you have AMD there as well. Then you have Lind. You have, let me see, I'm trying to name companies that you all will recognize. Qualcomm is another great company. Texas Instruments, Booking Holding. Listen, Comcast, Honeywell, Amgen down here. Let me see what else. Micron Technology, Gilead Sciences, Starbucks, Lam Research Corporation. As you know, I did a video on Lam Research Corporation. Might be 1 or 2 videos back. Go take a look at that video. But it's right, again, it's right here. That is all right here. This is all stuff that you're getting within this basket of tech. Listen, it's a one-stop shop. QQQ is a one-stop shop. And on top of that, for you and I, for us, the reason why you're here is for the dividend investors. You get a dividend on top of that, right? You get a dividend on top of that. What's the dividend? It's 0.57%. Hey, it's not a whole ton. It's not a whole bunch of money, right? There are certainly other stocks that you could buy that will have a greater dividend yield. But again, considering what is inside of this basket of stocks, I would not have a problem buying and holding any of these. This is a no-brainer for me, y'all. This video is going to be really quick. This is a no-brainer for me. So what am I doing with this? Well, I am buying the QQQ. I am buying that every single day, all right? And I think we're going to do this for the year. I think for the year of going into 2025, I'm going to buy and purchase QQQ every single day that the stock market is open. I will be purchasing a share of QQ, not a share, Jesus Christ. I certainly don't have $530 to spend on a share every single day, but I will be buying a small piece of QQQ every single day. Right now, that price is going to be $15 every single day. So $15 every single day is what I'm putting into QQQ, and that is outside of my other investments. But listen, at the end of the year of 2025, I'm going to do a wrap up, and hopefully at the end of next year, we'll be able to look back at this. I will be able to look back at this and say, man, this investment paid off. It's one of the best investments that I've ever made. And I think even beyond then, I don't have a problem owning QQQ because, again, we're getting those dividends. And more importantly, we are investing in proven companies with wide moats that will be around for the foreseeable future, right? So that is all you're getting, all right? This is what you're getting with QQQ. And because it is an ETF, there is no chart as far as what the investors think, right? There's no stock analysis from the investors telling you to buy, hold, or sell, simply because it's an ETF, and you would have to do that on an individual basis for each company. But listen, this is a no-brainer going forward. Y'all let me know what you think about QQQ down in the comments. Again, this does not require a deep dive at all. Great companies, dividend, what else do you want? See you in the next one.